I am Vinay Kumar C, Assistant Professor and NSS Officer, Sri Venkataramaswamy College, Bantwal. Today's online class towards Financial Accounting 1, Class 3. So, accounting standards. Accounting as a language of business communicates the financial performance and position of an enterprises to various interested parties. The financial statement have to be exhibit a true and fair view of financial results and its states of affairs. So the meaning of accounting standard. Accounting standard are the standards which have to be followed to ensure that the financial statements are prepared in accordance with the general accepted accounting principles. An accounting standard is a selected set of accounting policies or broad guidelines regarding the principles and the methods to be chosen out of several alternatives. Move on to historical background. Towards accounting standard, the International Accounting Standard Committee was established with the objective of formulating the standards for the preparation of accounts and presentation of financial statements. During 29 June 1973, the International Accounting Standard Committee came into existence with an agreement by the accountancy bodies of 9 nations. International Accounting Standard Committee comprise the professional accountancy bodies from more than 100 countries. Another one, the Institute of Chartered Accountant of India, that means ICAI, and the Institute of Cost and Work Accountants of India, that means ICWA, are the members of International Accounting Standard Committee. The member bodies are obliged to support IASB by adopting accounting standards in their respective nations. Next, the objectives of accounting standards and also called as the importance of accounting standards. Standards place restriction on behavior and therefore they must be accepted by affected parties. The main objectives of accounting standards are: the first one, it helps in correct understanding and exchange of economic and financial information, and also it facilitates smooth flow of international investment. The second one, accounting standards are essential for globalization of industry and good corporate governance of a business, and also it helps to eliminating the differences in accounting policies and practices, and also it ensures the incorporation of latest trends in accounting. The main advantages of accounting standards, the first one is reduction in variations. That means it reduces to a reasonable extent the confusing variations in the accounting treatment used to prepare financial statements. The best example is US accounting standards and Indian accounting standards, where the preparation of financial statement is completely differs. The next one is disclosure behind the law. There are certain areas when important information is not statutory required to be disclosed. Accounting standards may call for disclosure behind the required by law. Another advantages of accounting standard is facilitates comparison. When financial statements are prepared in accordance with the accounting standards, the financial statement would become more reliable. That means in different part of the world, however differences in the institutions, traditions and legal system from one country to another give rise to differences in accounting standards practiced in different countries. Next, incorporation of latest trends. Definitely, as accounting standards are formulated after taking into consideration the international accounting standards, it ensures the incorporation of a latest trends in accounting in the preparation of financial statement. The example is IFRS, means International Financial Reporting Standards. That is the latest incorporation towards accounting. Last one, it guides to investors. Not only the investor, even though it guides to the professionals about the item to be followed consistently. Accounting reports produced in accordance with the accounting standards are regarded by government office and tax authorities as quite reliable and acceptable. The important topic is statutory bodies to prescribe accounting standards, mainly ASB, NACAS and NFRA. The first one, Accounting Standard Board, that means ASB. The Institute of Chartered Accountant of India recognized the need to harmonize the diverse accounting policies and practices, constituted an accounting standard board on April 21st during 1977. The main functions of accounting standard board is to formulate accounting standards so that such standards may be established by the Council of Institute of Chartered Accountant of India. ASB will take into consideration the applicable law, customs, usages and business environment. Next one, NACAS, that means National Advisory Committee on Accounting Standards. It is also a body set up under section 210A of the Companies Act 1956 by the Government of India. It advises the central government on the formulation and governing of accounting policies and accounting standards for adoption by companies. Under section 210A of the Companies Act 1956, an advisory committee called National Advisory Committee on Accounting Standards had been constituted by the central government. Next one, NFRA, that means National Financial Reporting Authority. It is also, as per the new Companies Act 2013, was replaced by NACAS was replaced by NFRA. It is a quasi-judicial body which regulates aspects related to accounting and auditing. Section 132 of Companies Act 2013 provides for the constitution of NFRA by the central government to provide for matters relating to accounting and auditing. The structure of NFRA, they are accounting standards committees, auditing standard committees and enforcement committee. The main functions of NFRA. NFRA may investigate in matters of professional misconduct committed by any member or chartered accounting firm, and also it's the quality of service of professions associated with accounting standards and auditing policies. That means it monitor the quality of service of professions. NFRA shall have equivalent powers as a civil code under the Code of Civil Procedure 1908, and also NFRA may impose penalties, and also it may conduct quality review of different companies. Next one, NFRA may investigate against the auditor or audit firm which conduct audit of 200 or more companies or audit of 20 or more listed companies in a year. Anyway, in next class we are going to discuss the Indian accounting standard. So upcoming topic is Indian accounting standards. Thank you for watching.